taxes, I want to talk about some of the Forex ideas this morning. So first, we're going to look at the GBP pairs. As you can see, I have my watch list flagged here. I'm focused on GCHF and GCAD this morning. We had a potential for a short idea on GCAD. I'll pull up the 15-minute here. Potential for a short idea. However, it didn't fit the bill for a proper A1 entry. We'll go into this in a minute so I can explain to you why that is. But I want to show you here on GCHF. This was the idea that I had the most confidence in, that this was going to continue to rise. And that comes based on the 1-minute divergence setup that we had. So we'll get into that as well. Euro JPY also made the list as this shifted here at about 12:30 last night, right after midnight, and now it's maxed out its ADR. ADR on this pair is only about 45 pips. For those of you that don't know what ADR is, it's average daily range. Average daily range, in my opinion, is a really important indicator that we use because what it does is it tells us how much a pair has left to move in that specific day. So if you have a setup like this one on Euro JPY, the stop loss here was about 7.6, let's call it 8 pips. With an 8 pip stop, 45 pips left on ADR, you can still potentially get good risk reward because at 2R, you'd only be looking for 16 pips, and it had more than 16 pips left to move. In inverse to that, let's say your stop loss was 8 pips, but there was only 10 pips left on ADR on that average daily range, then that might not make as much sense to take that trade because you might not get your 2R that we look to trade with the ASFX systems, just because you have to assume it's probably going to be an average day. You never know what day it's going to bust through ADR and what day it's not. So that's why I like using average daily range as a great take profit level, as a great indicator to really take a trade seriously or not as well. So we'll talk about that a little bit more in detail as the morning goes on. You can see Euro NZD moving down with that, Euro GBP moving down as well. Euro CAD moved lower, but really looks choppy inside the Asian range. As you can see, my Asia high and Asia low marked off with these horizontal lines. Euro USD, same thing, very, very choppy today, which is weird because it's a Monday. You'd think something would happen, but maybe because Friday's move was so volatile, it's really just sitting in that same range where it finished off on Friday. So that's what was on my list this morning. And then CAD JPY has been something that you could be looking for shorts on today. I'm not in love with it, and I'll explain why in a second. We're going to go through the whole list here. Just to give you an update across the rest of the market, gold is down 0.3% to 1885. Silver is down 0.7% to 2758. Oil is up about 0.1%, US oil and UK oil. And Bitcoin is up 1.4%. Crypto is green this morning. So if you take a look, a small little green day here forming so far. If that's how it's going to finish, I'm not sure. I'm not ready to say that, but I will give you my input here on the Bitcoin chart as well. We're going to look at the daily time frame. I want to start with GBP CHF because I think this was the best idea that I had this morning, and it's where you guys can probably hear my confidence and then learn from me the most. So if you're new to the feed, make sure you subscribe. Make sure you give me a thumbs up if you're enjoying the video so far. And we'll get into this here. Let me turn my music up a little bit. Who's here this morning? Good morning, Kareem. Good morning, Craig. Kenneth, Dom. Good morning. Vijay. Good morning. Jack. Good morning, good morning, good morning. I appreciate y'all being here. Make sure you share the feed. Let's get everybody on here. Yes, we can definitely talk about XRP. XRP is just sitting under $1 right now, 96 cents. We'll definitely talk about that as well. So let's talk about how I formed my watch list this morning. So the first thing we always look at is the TDI. That's going to determine what direction this pair has sentiment to move today. Here on GBP CHF, if you look at the TDI, you can see the yellow line, which is our market sentiment line, is sitting in the sell zone since the changeover of day, since the start of the week right here. Good morning, Javier. Good morning. Good morning. So since we have a perfect TDI holding the sell zone here, good morning, Jerome. Nathaniel, good morning, guys. Appreciate you being here. Laura, good morning. Good to see you. So since we have this perfect TDI here, we're just getting into everything. You guys are tuning in at the right time. What's up, William? Good morning. My throat's a little dry today. Hold on. So in the first segment of this video today, I want to show you guys how I built my watch list this morning. I know Mondays can be very exciting. You want to come in, you want to find a great trade. You might even potentially take a trade that's not a great setup just because you want to trade. And I think if you build a proper watch list, you can actually avoid falling down that path of taking a trade that isn't a high probability setup, but only taking it because you want to trade. That normally plagues people in the beginning of the week, more so for me at the end of the week. I'm very patient at the beginning of the week. I don't know about you guys, but as we get towards the end of the week, I get a little bit more aggressive, especially if I haven't traded because I want to trade. You know what I mean? So let's talk about, like I said, how I built the watch list this morning because I think that's going to show you how you can avoid that whether you want to call it FOMO feeling or that greediness feeling, how you can control that. And it starts with building a tight watch list so you're not just checking all of these pairs every day, feeling overwhelmed, and then seeing momentum happen on something that you weren't really focused on, and then just jumping into a trade chasing momentum. A really good watch list can help you avoid all of that. So first, you can see the watch list is flagged here on the right side of the screen. These are the pairs that I'm looking at every day, and I'm not really trading all of them. I'm normally focused on GBP pairs that you see here and the Euro pairs that you see here. Very rarely will I trade CAD or CHF up here or these USD pairs, UCHF and UJ. They just don't work well for me and my style and how I like to trade. And really, if you go back test some of these pairs, like USD CAD is not even on my list because it never tested well with the ASFX systems. So it's not something I look to trade. So now GBP CHF, disregard my notes for a second. We're going to come back to that. You can see from the start of the day on the liquid 50, this yellow market sentiment line. I'm going to stop calling it the liquid 50. I want to just call it what it is, the market sentiment line. I know you guys don't all know my slang. If you take the courses, you'll know the slang. And I got to plug the summer sale before we get into this. It's 20% off all courses, all seminars, all merch, the workout shirts, the trading journal. I got it on the desk behind me. Everything is 20% off right now. So make sure you guys hit the link. It's pinned here in the live chat. It's in the description as well. And go check out the website so you can see what you don't have that you might want to add to your arsenal of education and of tools to help you trade more efficiently and more consistently. So first thing, market sentiment clearly bearish today. EMAs through the Asian session look bearish as well. You do have this dark blue 800 EMA going flat across your screen with the 200 EMA above that. So what could be better about the EMAs to match the short trend that we see here on the TDI would be if the 200 EMA, this white line, was underneath the 800 EMA. That would be the one thing that would be better, okay? Other than that, though, it looks like it's in full agreement on the 15-minute time frame that we're looking for short entries today. So when I woke up this morning around 5 o'clock, did my meditation, did my thing, got my coffee, of course, got to the desk. This is pulling back to the 50 EMA here at about 5:30, 5:45. And at the 50 EMA, I like to look for D1 entries. The D1 system uses the 15-minute to identify the level and the 1 minute to identify the trigger, the risk point, and the entry. So when we get to the 50, the one thing that we have to notice about this is that it does shift up. If I blow up the 8 and the 21 EMAs, because they're very important, just make the lines a little thicker so you can see them here. Right in here, the 8 and 21 EMAs crossed up. So if we're looking for short trades, that's going to be the first knock. First thing I don't like about it is that it shifted up. So even though it does shift up, if it holds the 50, I would still be willing to look for short entries if the divergence on the 1 minute is bearish and it presents levels that we can look to trade off of. We have opportunities, I'll show you some from last week, where you can trade short into an upshift. It's just a lower probability trade, okay? So that's the first knock against it. The second knock against it is that it does tap oversold right there. You see how it hits that 30 level? That's another knock against it. Even though it's not a serious knock, it is something that we have to take into account when looking for short trades. So now we have two knocks against it. It's in an upshift when we're looking for shorts here, and it's already hit oversold. The other knock is the EMAs could be better. So you do have three knocks on this, which says, okay, let's very much wait for this to set up in a better formation. Maybe we wait for it to shift down and we trade it as an A1. Maybe we wait for the shift down and then the pullback and we trade it as an A1 two-candle formation. Don't try to forecast that out. Work through the checklist and say, where are the probabilities? Right now, I just gave you three things that were wrong with it. It was in an upshift, it's been oversold, and the EMAs could be better. The oversold and the EMAs could be better aren't that much of a knock. So at best, you're giving this a B setup, maybe a C setup. But the problem with this is if you go to the 1 minute, I'm going to blow up the 1 minute now. When this comes to the 50 EMA, which is right here, this dark blue line, that's the 1 minute 800. It's the same thing as the 15-minute 50. This is about 5:30, 5:15. There's no bearish divergence present here. Price action high and the RSI high up until that point are at the same point. If the RSI had come higher here, but price had been rising and the RSI had been falling, if this RSI had been up here, then we would have had divergence and we could have looked for shorts. But because we didn't have that divergence, there is no D1 signal. So you're just waiting. And as we waited, I did my analysis, I zoomed out, and I could see back here at 2 o'clock in the morning, we set up some bullish divergence on the bottom. That bullish divergence, if I was to sync up this line in this zone here, that bullish divergence comes right as we hit oversold, okay? That was what my notes said down here as well. So now that we know there's bullish divergence on the oversold level, and we can see here, this is the first pin where I drew the zone, this is a higher low than tested, test it again. So you have the bottom, like we use divergence to identify. You've seen that in all my other streams and in the courses. Here you have the higher low, tests it, and it moves higher. So this is moving up. It pulls back to the 200 EMA on the 1 minute, sets another higher low, you would think, but we need to confirm that higher low. So instead of going short here, trying to trade into the levels where it's clearly rising, I'm watching, and I see it then test that zone again. This zone is drawn by that pin right here. It tests that zone and then makes another move higher through the 15-minute 50, that 1 minute 800 EMA. So this is clearly rising, and it's identifiable just by looking at the shift here on the 15-minute. So you don't get caught going short. If I sync up this circle here, you don't want to get caught going short in here when on the 1 minute you've got bullish divergence in control and structure showing you that it's moving higher. The reason why I think that you also had the move higher is because it broke through the 50 EMA for the second time. And as you can see from my notes here, the first break of the 50 EMA, which happens right here, that bar, when that closes above the 50 EMA, that tells me this could change bias. And especially with that 1 minute structure coming higher, I think you would more often than not see it move from the 50 up to the next EMA, which is the 50, which is the 200 white line and the 800, the blue line here. Since those EMAs are close together, you know it's going to slow down here. It's a very significant sign when EMAs come together like that. It shows you that it's a solid level. And that's the same price level we consolidated at last night, 127.35. So if you look into our group chat as we were going through this morning, I'll show you. And you get access to this when you take the courses. You can see, I said I think GCHF is going to 127.35. I said it right there. I can blow that up so you can see. This was at 6:47 in the morning. And I sent the picture here too, so everybody could see as it's coming through the 50 again. Right here, I was like, I think this can come up to 127.35. And that's what it did. And that's just using the 1 minute structure, not to identify a trade, but just using the entire checklist and my way of doing analysis with divergence and with these EMAs to determine, yeah, this is not a good idea to be going short here.